Good evening. The Malaysian ringgit has recorded a strong rally over the past year, emerging as Asia's best-performing currency. And analysts say this rise is being driven by domestic economic strength, not just a weaker US dollar. According to a Bloomberg analysis, global macro factors such as shifts in risk appetite and movements in the greenback account for only around 25% of the ringgit's nearly 12% appreciation over the past 12 months. Instead, the bulk of the gains has come from strong local fundamentals, including better-than-expected economic growth and rising foreign investment inflows. These factors have lifted the ringgit to its highest level since 2018. Wee Koon Chong, Director of Asia-Pacific Macro Strategy at BNY, says the currency's outperformance is closely linked to foreign direct investment, particularly into data centers, alongside solid growth momentum and the government's renewed focus on fiscal consolidation. He believes these strengths could allow the ringgit to continue outperforming its emerging market peers in the first half of the year. The analysis also shows that global bond yields and equity trends have had less influence on the ringgit compared with currencies such as the Thai baht, Singapore dollar, and Philippine peso. Investor confidence has strengthened as Malaysia's trade-dependent economy remained resilient despite 19% U.S. tariffs introduced last year. The country's GDP expanded by 5.7% in the October-December quarter, helping full-year growth exceed official projections. Malaysia's growing role in the artificial intelligence supply chain and its emergence as a regional data center hub have further boosted long-term investor appeal. Foreign investment surged by more than 47% year-on-year in the first 9 months of 2025. Sentiment has also been lifted by optimism surrounding the Johor, Singapore's special economic zone, supported by new tax incentives and projections of $26 billion in annual economic contribution by 2030. However, challenges remain. Economic growth is expected to moderate in 2026, and HSBC has warned that Malaysia's bond market could face pressure if Japanese investors repatriate capital amid rising yields. Despite these risks, major banks remain optimistic. Goldman Sachs expects the ringgit to strengthen to 3.85 against the US dollar over the next 12 months, supported by strong technology exports, steady monetary policy from Bank Negara Malaysia, and continued foreign investment. The ringgit has already gained more than 3% in January, while foreign investors have returned to Malaysian equities after heavy outflows last year. Overall, analysts say the ringgit's rise reflects structural strength in Malaysia's economy, suggesting its gains may prove more durable than previous cycles. That's the latest from Kuala Lumpur.